Thank you, Jordan. Thanks for having us. We met maybe 3 or 4 months ago and connected actually as a result of these guys. And we're a heavy user of QuickBooks. We work with a bunch of different clients. And we got into the mining industry I personally got in about 5 years ago, started working with these guys at Simple Mining based out of Iowa. Backtrack 2014, I started working in my firm. I actually worked at Markham. Where's Wolf? He's not here right now, but I was working at Markham for a few years. That recently got acquired by CBiz, so I know a lot of the people that he's dealing with now, which is pretty cool. But our IT guy at the time in 2014 comes into our office and he's like, hey, I want to take 50K out of my 401k to mine Bitcoin. And we look at him like he's got 3 heads. We're like, what? And I heard about Bitcoin in 2013 at Markham, didn't know anything about it, didn't even think to throw a couple $100 in it. But IT guy, no longer in business anymore, fully retired, absolutely destroyed it mining Bitcoin in the early days. But
thanks, Mike. Going to talk about everybody's favorite topic today, taxes. So Mike's a longtime friend and helps a lot of our clients at Simple Mining, from public companies, private companies, retail investors, so on and so forth. So smart guy, owns a firm in New York. A lot of good insights here that we're gonna cover today. So I guess we'll start just very broadly. Mike, how does the IRS kind of view Bitcoin mining from a reporting standpoint? Is it regular income, or what does that kind of look like?
whatever the price of Bitcoin is and how much Bitcoin you mine, that's the fair value of the revenue that you've got to recognize on your tax return. It's pretty straightforward. The problem becomes when Bitcoin drops and you got to pay taxes in the next year at a value that is significantly lower than what you mined it at. You could go bankrupt pretty quick. So you got to manage the cash, whether you're converting from Bitcoin to USD, often just a hold on the side for taxes is very, very important strategically. And we work with our clients on helping them through that.
A common question would be, how should I set this up? You know, when you're advising customers, should you do this as an individual? Should you form an LLC, S Corp? Maybe hit on the pros and cons of each, and what you would kind of advise and recommend to your customers.
From the mining perspective, obviously you can buy machines and run it as an individual. I think that creates a lot more audit risk. Anybody here working for the IRS? Okay, great. I'd have a handful of questions for you if you did, but it's a new industry, right? I haven't had a client go through an audit in the digital asset world in a number of years, and I keep seeing every tax season I get more clients with Coinbase statements, Gemini trading, River, and it's quite interesting to see it grow over and over each year. But when obviously we're doing this for strategic tax planning, so you may want to take advantage of the one big beautiful bill and bonus depreciation and put this into an LLC and protect the asset that costs so much money to do, right? These computers are not cheap, between $5,000 and $11,000, sometimes more, depends on the unit you're going with. I would put it in an LLC or an S corporation and protect the assets. If you have multiple businesses out there, you get sued in another business that's also mining Bitcoin, guess what? That's up for grabs in a lawsuit. Separate it, segregate it, you'll be way more protected.
And I think to elaborate on that, active versus passive is a pretty gray area, it sounds like. So what is kind of the difference between active and passive participation as it specifically relates to mining?
Let's form an LLC, 5 partners, 4 of them just put cash in. They're limited passive investors. If I'm the one managing everything, I'm more of the active role. So when it comes to getting a K1 with a big fat loss year 1 for the bonus depreciation, they're going to have a harder time taking advantage of that loss than I would, because I'm the one putting all the hours and work into it. The IRS has 7 tests to determine material participation. The easiest one is showing that you've done 100 hours in the business managing, choosing what machines, managing the portfolio, taking care of the bills. A passive investor that's just putting money in is not going to be able to claim active participation and use the loss on their tax return. So hopefully they've got some rental properties that they can offset their passive rental income with against their Bitcoin mining losses with. That would be the cleanest and easiest way to do this. But the second you try to go active, you got to have the documentation. You want to be able to support that you've got the hour requirements that the IRS is stating out there. Nobody's probably going to get audited in this area. I'd rather see them go after people that are claiming real estate professional status in their rental properties and taking massive cost seg depreciation deductions there. There's way more industries to be audited than this one. But there's a lot of complicated rules to go through, but just, if you want to treat it as an active business, just be careful. Show the documentation.
You mentioned bonus depreciation a few times. Maybe we can hit on that a little more in depth here. So, as it specifically relates to just write-offs, bonus depreciation, what does that kind of look like? I know there's differences with how the federal government classifies that versus individual states. So, yeah, if you don't mind hitting on that, that'd be great.
So the government recently passed law, July 4th, allowing 100% bonus depreciation expensing of equipment. Let's say we buy $100,000 worth of mining equipment in December, right? Put them into service, generally going to have a big $100,000 negative on my K1. And if I'm treating this as an active business, I can offset other income sources, maybe W-2 income, right? That would be great. That creates a big tax advantage. You'll probably save 25, 35%, depending on what tax bracket you fall into. Overall, dollar for dollar on the filing of that tax return. That's tremendous. Prior year, 2024, the rule was 60%. So this is a big advantage to take on your tax returns. We don't know how long the administration is going to, the next administration could change the tax law, right? And they could get rid of bonus depreciation. So if you can, take advantage of the opportunities now because things could change pretty quick. And to address the state question, states sometimes do straight line depreciation, 5-year, 3-year property. It could be totally different depending on what state you live in. So just got to be careful with the state add backs where they won't allow the bonus depreciation. And that could put you in a bit of a bind if you're relying on that as a big offset.
As it specifically relates to kind of recapturing that depreciation. So if I buy $100,000 in equipment and the year from now I want to sell it, I took the depreciation in 2025. How does that kind of affect my situation in 2026 when I go to resell that equipment? And maybe you can just walk us through that scenario.
So if I, put the equipment into service, sell sometime in 2026, if I got long-term treatment on it, great. The benefits could be better. Basically, if I took $100,000 bonus depreciation deduction and sell the equipment for $50,000, let's say it was worth a little bit less, I've got to recapture that $50,000 at ordinary income tax rates, and I don't get the preferential capital gain treatment on it. So it's a little bit higher of a tax hit. If Bitcoin went to 400,000 and I was able to sell my machines for 300 grand, right? I then get capital gain treatment on the excess above the 100 grand because that was my original purchase price.
For anybody entering into this, what are the normal expenses that they can realistically write off in their business?
First is the electricity cost, mostly 6 to 8 cents per kilowatt hour. That's the main one. You've got insurance, you've got conferences, you've got travel to conferences, hotels, repairs, and that's probably, other than depreciation, those are the biggest ones that I would expect somebody to use. I mean, people are asking me if they can write off their car, can I take a home office deduction and do all these other things? I'm like, you know what? Let's keep the audit risk a little bit down and not go into that area. If you bought a personal laptop to keep your books or, just manage the pool and your Bitcoin, that's fine. Take the laptop benefit, but don't get too greedy.
Can I write off our golf round tomorrow?
I'm a big golfer, and the answer is no, unfortunately. People like to ask, "Oh, can I write off my club memberships? It's used for networking and marketing." Good luck. I mean, if you got a big business, $50 million business out there, and you want to bury $30,000 a year, golf membership, you could probably get away with it. Nobody's going to care, but just be careful. I wouldn't get too greedy. Pigs get slaughtered.
I think maybe this is where Jordan's software comes in. But as far as reporting goes for a miner, it could be very complex. The miner pools don't really provide a lot of, there's no KYC, there's no reporting they're required to do for you for the most part. So what does that look like on your end when you have a new client or an existing client and you're dealing with a million transactions, from the pools and Bitcoin they're selling and so on and so forth? How do you go about kind of organizing that for them?
Well, before Bitment was around, we were using QuickBooks Online and a software, a crypto tracking software called Coinly. There's a dozen of them out there that you may want to subscribe to keep yourself organized, mainly track cost basis. But we'll set our clients up with a Coinly account. It pushes activity to QuickBooks Online. It makes our process really efficient and easy. We'll onboard the clients, let them connect their public keys, and then we'll be able to track the Bitcoin from wallet to exchange or hardware or cold storage, wherever they want to send their Bitcoin. We're tracking it all the way through. And most people are trying to hold their Bitcoin. Not a lot of people are trading it that are mining. So the biggest thing is knowing what your cost basis is, and that's what this software does very well. Looking forward to moving over to Bitment for a lot of these mining clients in the future, because it will make everything integrated under one platform where it's kind of annoying managing multiple sources of data.
What are some of the common misconceptions you see or mistakes from new customers or existing customers? I think we can speak just broadly. I know you got some interesting stories of people trading different coins and different things, but as it relates to mining or just crypto in general on the tax side.
In the early days, a lot of people just didn't realize they needed to report their income from trading. They were trying to hide it and get away with things, and that's like a big red flag. You can get in a lot of trouble. They could take half of your stash away if you got nailed in an audit. The penalties are pretty significant. I've had mining clients that had 20 and 30 machines that didn't report, that didn't depreciate them, that they never put them on their tax return in 2022, 23. And I'm like, now you're coming to me and you've got all these machines. How are we going to, do we want to go back and amend, or do we just want to say we're contributing them at the fair market value of what it is in 2024 to get them on the books and start depreciating these things? Just a lot of gray area, not knowing what to do has been the biggest issue that we've seen. But I've had a lot of interesting clients that got into ICOs. One client got into Filecoin when Filecoin was at like 60 cents, and it ran to 250. If anybody remembers what that thing did, he became a multimillionaire. But just it's been wild to see people from all over the country just getting into different things and coins popping off, and just they try to hide it. They're using Phantom Wallet, and they're like, oh, nobody's going to see my Phantom Wallet. But when you need liquidity in 10 years and you want to put this back on an exchange to sell it, good luck. You're going to have a big problem, because you're going to have to self-report that cost basis. And if you have a $10 million capital gain, they're going to look at you. So you need to do the right thing and just be careful with what you've got.
I think a lot of people in the audience have CPAs, and a lot of our customers do, which is where I think you add a lot of value. I'm a little biased towards Mike, but for people who already have a CPA, where do you kind of add value? A lot of accountants and whatnot don't understand Bitcoin, don't understand mining, Filecoin or Peanut Coin or whatever the hell they call these things. Where do you kind of come in to bridge that gap between your customers that are invested in this industry and their accountants that don't really know a whole lot about it?
We'll work with clients in a variety of ways. If they want to stay with their current CPA, that's totally fine. I'm not looking to take over everything, but there's not a lot of firms out there that know this industry, and their current CPA won't touch it. That's the most common thing that I've heard, and that's why they're speaking with us. And we can do the Schedule C and give them just that, and they can take it back to their personal accountant, and they can do their filing there. We could do the partnership return, S corp return, and just give them that K1 that they need. And then I've got clients that are like, look, I like what you've said in the interview, and we appreciate everything you know. We're going to bring everything to you, which is great. That's fine too. So we can really customize the whole package for whatever somebody really needs and make it easy and efficient for them.
For 2026, what are you expecting from the IRS in regards to digital assets as it relates to new bills or specific reporting that's required?
One of the biggest things we're all going to deal with if we trade digital assets is the new 1099 reporting that's going to happen for next year. So just like you would with your brokerage account, you're going to get a 1099 DA form, and it's going to provide you your proceeds for the year. The biggest thing that it's not going to provide is your cost basis. It may not have that accurate. So be prepared and track your cost basis on whatever you've sold for the year, because a lot of these statements are going to be blanks. River is doing a great job in already providing these forms. I dealt with a few clients that had 1099s from River. The cost basis wasn't there, which is fine. They just got to go back and figure it out so we can at least establish some sort of basis. But that's one of the biggest changes that we're going to see.
Well, appreciate it, Mike. I don't know if anybody has any questions, free tax advice for a few minutes here. So
Shoot, yeah.
Say you lose some transactions, say you traded on exchange, they were bankrupt, lost all your transaction history, obviously your basis is zero. I understand the guidance is like, well, if you don't have a basis record, you just report zero. I mean, that seems absurd considering the taxation step, and now you're just giving them more than they already rightfully received from. So do you have any guidance around what to do that isn't the answer? Use a $0 basis?
What you could do is start from square one. How much did you invest initially onto that platform? Did you put 50 grand in? There's your basis. That's hard to argue against that. So, it's a very difficult situation. And in the early days in 2020, 2021, that happened a lot. People were on Binance, and then Binance got shut down for a lot of US citizens, and you lost all your activity. It happens. So you just got to try and do your best, show the transfer. You could show the withdrawal out of your bank account. So that's probably the best place to start. But it's pretty difficult.
Are you all seeing miners who are able to collateralize their hash rate and actually use that to take out
there's a lot of products like that in the market currently. Let me rephrase. There's a lot of hash rate forwards products where you can kind of cap your upside, I guess, to a certain extent, right? And lock in a guaranteed revenue stream on your mining and whatnot. As far as specifically collateralizing your miners, very difficult to find anything competitive in the market for that. You can borrow at 17, 18% and probably do that. But I think that industry is still maturing. You can't go to a traditional bank and get financing very easily. We've orange pilled a few banks in Iowa where we were able to offer that at kind of competitive rates, 10 to 12% over a few years, but very, very tough for any industry-wide program, or there's other risks for any bank that's collateralizing that, because the equipment could break if they don't know the hosting provider. I think there's just too many variables for the bank to get comfortable with it. And then aside from all that, it's what is Bitcoin, and this is not something we're super comfortable with. So I think maybe in the next 3-4 years, I think you'll start seeing some of that, maybe somebody coming up with a better product for that, but not. There's really no market-wide offering for that at the moment.
I've spoken to Luxor. Luxor is probably one of the only pools that might do this, where they'll buy your future hash rate from you. And I went through the calculation. It's a little complicated, but they'll do up to 25% of your future hash rate. So to get liquidity for the next 6 months of what my machines are going to produce and be able to take that cash and reinvest it into more machines, yes, that does exist with Luxor. You just got to check the rates and see if it's worth it. I believe it goes into effect for this year, so you should expect a 1099 for 2025. But I have to double check. You can look that up and double check.
With that, so I was reading that like they're basically going to send you a 1099 this year, and they're allowed to have a basis flag, but the next year they have to report a basis, even if it's wrong.
Yeah.
That's the question I wanted to go to. Is like, let's say the exchange doesn't have your basis because you don't have your basis, so you can't possibly get the exchange correct, and then the exchange reports the incorrect basis to the IRS. What do you do?
So I recently did my 2024 taxes, and I used Coinbase. I have an account there, and there was 20 transactions that I had to self-report the basis on. So if anybody has a Coinbase account and dealt with this recently, there's a slew of transactions that they don't know where it came from. So they want you to type in literally what you think the basis is. So they're doing the right thing. They're teeing it up to make it easier for the future. But I think you're right that it could be blank, and then in the future years they're going to throw a basis on there. But they're asking the questions on those transactions now to help figure it out. But it's going to be tricky to do, definitely.
So do you think like if they report like next year when they start reporting the basis for next year's 1099, let's say they say it's this, and like a previous question, you don't have the basis to give them. Is your assumption like by default that you're on the hook for the incorrect basis amount that they report?
Well, they got it from somewhere, and they got it from me when I self-reported it. So they're going to get it from you. They're not going to just throw a number on there.
Well, I thought this was like I was reading what they said. They were saying if you don't give us your basis next year, we're just going to give you one. We're going to create one basic market rate for them. It's like obviously that's very disadvantageous.
I haven't seen that yet, so I don't know. I can't answer that, but I'm curious to see what they're going to do. You can fight your basis. I mean, if you want to throw it on a Schedule D and throw the proceeds and a cost basis on there that is a proper one that you think it is, you're going to get a letter potentially from the IRS, and then you're going to have to prove the documentation exists. So it's going to be tricky.
And that already happens sometimes with regulatory transfers.
Oh yeah, it happens all the time. And what we do is if we'll look at, sometimes you'll find like they traded the same stock and it actually had basis on it. So we could go look up on, like Yahoo Finance and grab like the stock price back in April of 2018 when they first bought it, because there's a trade already in their upper part of their statement. We can back into it.
Sorry, one other quick question. How are you all treating the like selling wallet by wallet? Is that a new reporting piece as well? Where say it's like buy an Apple stock in Fidelity and Morgan Stanley, I can't use the basis. If I'm selling over here, I can't use the basis, right?
That's correct. Yeah, it has to be based on the wallet. You can't choose a different basis in a different wallet. That's it's a great point.
So if your 1099 is actually in your swamp, so I use River, I use something else for exchange, but
Yeah.
What River reported last year was, strike was incorrect.
Which part? The proceeds or the cost basis?
The cost basis. And I can't remember exactly why at this juncture. I've got it on a spreadsheet, and I know it was.
Did you transfer
So like,
currency Bitcoin into the Strike wallet? So then that's your base. What was the basis of that initially?
so what if you're like, if you're transferring, so let's say you're transferring, I might want to have some my Bitcoin on exchange, I might want to sell it at this price. But then you decide, I don't want you to, just take it right back off. Is there any issue that when they report that, are they going to report that you have a basis as of the market price that you put it on? And then we take it off, let's say it's a week later or something? You see what I'm saying? In other words, how do they report that?
That's going to be a great thing to experience because I have no idea. It's
I stumped the chump.
Yeah, I mean, I don't have all the answers, I'll be honest. And I'll tell you, if you ask me a question about taxes and I don't know, I'll look it up and give you an answer. I'll tell you straight up that I don't know. I'm not going to lie to you and make something up. But I can figure it out. Most people can figure it out, especially we got Chat GPT and Grok in our pockets right now. So you can look, I get tested all the time from clients. Oh, I want to do this, I want to do that. Okay, relax. Like don't find something on TikTok and take advantage of it on your tax return. That's like the worst thing you could do right now.
So, kind of a follow-up on a similar thing. Let's say you want to do a wash sale, or you want to,
I love that. That's a great strategy.
so let's say you do that. Two questions. One, is there any specific amount of time that has to transpire between the moment you sell and the moment you buy? Obviously, one has to be up.
For digital assets? No.
Alright. And two, since the platform doesn't know what your cost basis was, you are obligated to keep track of that and know. And again, I guess this gets to the question, what are they gonna report as the cost basis for that?
For the wash sale? The new buy?
No. What you initially put on your sale, your,
Well, I guess start at the root, right? If I transfer in 5 Bitcoin, what's the cost basis of that 5 Bitcoin? You're going to be asked. The platform has to ask you. That's what Coinbase was doing to me. They were asking me, did you transfer this 5 Bitcoin in? What was the cost basis of that? That's why we use coin tracking software. Yeah, it becomes
Mike, is it
very
fair
tricky.
to say, I know we're out of time, but on any of this stuff, a lot of good questions, you have to prove kind of without a reasonable doubt how you came to this conclusion, more or less. If you can't find the answer, at least from our conversations, if I can't find the answer of my cost basis or all these different variables, that's my problem. Correct?
Yes,
The IRS is
the
still gonna
burden
have
of proof is on you. Sucks. It's terrible.
All of it's on Nick.
It's all on you, Nick. You're the reason.
Alrighty, well, thank you, Jordan and Bitment, for hosting this awesome event. Mike, if people want to find more information on you, where can they
Yeah,
go?
lcltax.com. Pretty straightforward. We're working with clients all over the country. It doesn't matter where you are. But yeah, I got into digital assets in 2017. Wish I bought more, like all of us wish we did probably. But I think it's the future, and I want to build a firm around that future, and keep going. So it was a pleasure meeting everybody. Thanks, Jordan. Great to meet you, and look forward to answering any questions after the presentation.